Welcome back to TechKidFX for another AGIX price prediction update, which at the time of this recording is holding below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. At the time of this recording, we are also trying to battle out with the key area of resistance at around the $0.35 mark. And the moment we manage to break through that key area of resistance, we can watch out for a successful retest. And once the retest is in and a success, then there are high chances that AGIX is going to give us a bit of a massive run up to the area at around the $0.39455 mark, which is our next key area of resistance here on the chart. We have also continued to obey the Elliot wave structures, and I'll start the video by first giving you the long-term outlook here on the AGIX chart, where you can see that we had been seeing a bit of a breakdown to the lower side in the formation of this wave 2, in a move that bottomed out within this blue target area in the formation of this wave 2. And all this played out after we fully peaked in the formation of that higher Elliott wave count 1, and that was after seeing a 5-wave structure to the upside, having the wave 5 giving us a peak at around the $0.67 mark, and also giving us the high for that first wave to the upside. And having seen the formation of that first wave and a corrective structure in the formation of this wave 2, now my primary scenario is that whatever we are seeing at the moment is the start of an impulsive wave to the upside in the formation of this wave 3. And in the formation of this wave 3, I'm also expecting to see micro Elliott wave counts in formation, having the wave 5 fully maximizing our minimum target areas. And this has been my primary scenario here on the AGIX chart, and I believe these micro Elliott wave counts are better seen here on the 1-hour chart. So jumping to the 1-hour chart for further analysis and to give you the short-term scenarios. Here on the 1-hour chart, you can see that I have this Elliott wave structure in white, where we had first seen that massive run-up in that first wave and a corrective structure in the formation of this wave 2. But in the recent dump in the crypto market, you can see that we have managed to lose our minimum retracement area in the formation of this wave 2, which I was able to come up with by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, and that was a minimum target area between the Fib level 0.5 and the Fib level 0.78. And having lost the Fib level 0.78, that means that now we have hit an invalidation point for this Elliott wave structure, and because of that I need to remove this Elliott wave structure from my charts and have a different Elliott wave count on my charts, where there are high chances that whatever we are seeing over here is a reset of this second wave, which is right here, which could possibly give us one more new low in this blue target area, which lies between the $0.35647 mark and the $0.17743 mark. So this is a move that we need to be watching out for here on the AGIX chart in case further breakdown continues. So in case we get rejected at our key area of resistance at around the $0.535 mark, there are chances that we might continue with our breakdown, get even lower, and lose the key low that we made at around the $0.28605 mark. And in case such a move plays out, then I'll be expecting AGIX to put in place one more new low in the formation of these higher Elliott wave count 2 within this blue target area. And once that happens, then from there we can start thinking of another impulsive wave to the upside in the formation of that wave 3. So that is what I'm expecting on the AGIX chart on the short-term scenarios and also on the long-term scenarios. And that move of getting one more new low can only play out in case further breakdown continues. But in case we see a reversal from the current prices and continue gearing up, then that will be suggesting a more bullish scenario here on the Agix chart. But for now, let's continue watching the key area of support, that is of resistance, at around the $0.35 mark, because in case we get rejected and lose the low at around the $0.32 mark, there are high chances that we are going to make one more leg down within this blue target area in the formation of these higher Elliott wave count 2. So that is what I'm expecting here on the short-term scenarios. And also taking a look at the indicators, on the RSI we are trading at around the 58 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, we have been able to print a bullish cross, though we are yet to see that massive increase in the buying pressure here on the MACD. So let's be patient and see how that plays out, and I'll be keeping you updated.